The impact is not just the mortgage, it's somebody who's paying a rental, it's every time you go and get groceries at the supermarket, it's your petrol you put into your car.
Well, many home loan customers are now looking to refinance. What proportion of your customers can't?
Yeah, look, it's a very small number that, well, not say they can't, but would have more difficulty refinancing with another provider, probably about 15%. And that then is up to the bank to make sure that those customers are looked after, because we know when they can move at a later date, if you haven't looked after them, they will move.
The RBA came under fire on Tuesday, with one economics forecaster accusing it of playing recession roulette. Do you think Australia will fall into recession?
Look, I think this economy is still quite strong underneath it. We've got very good resource prices being received into the economy. We've got agriculture doing very well. We've got our university student population coming back, which will be good receipts for money for our universities. We've got low unemployment at 3.5%. We're about to receive 300,000 migrants. So I think we're still in pretty good shape. It is feeling a lot slower though, and that is the Reserve Bank is trying to slow the economy down to bring inflation down. That's its reason for being. And I think that's what we're experiencing, but I don't see us going into recession this year or even next. I think it'll just be a lot slower.
Well, I believe your economics team thinks there is a 45% chance of recession in Australia.
Yeah, but I think they're also saying that this year we'll see about 1% growth and next year the same, which is I still see a growing economy, and that's going to be important.
NABs Australia's biggest business lender. Briefly, what are the sectors that most concern you?
Look, the sectors, if the economy continues to slow down, will be in the retail area. People won't be travelling as much, so it's the tourism sector. It's probably in the commercial real estate or retail areas. Those are probably the areas that will have the most difficulty if we get a real slowdown in Australia. But at the moment, they're still going very well. We're seeing very, very little stress in those sectors, but those are the ones that, as an economy slows down, are usually the ones that have the most difficulty.
One of the justifications for the RBA increasing interest rates was rising capital city home prices. What do you think the latest rate increase will do to the outlook for the housing market?
Well, I think it all comes back to supply and demand. There's very little homes on the market for people to purchase. We're seeing at the moment that mainly in the big cities that the house prices have stopped dropping, and we're probably going to see some slight increases in house prices over the next 12 odd months. But it's more around the supply and demand. There's very few homes on the marketplace. People are struggling to find them to rent, and we've got more people coming into this economy through migration.
NAB's dividend is back to pre-COVID levels at 83 cents, but the payout ratio is 64%. Could it have been bigger, or could you have even offered a share buyback?
Well, look, we've taken a pretty prudent approach. We've just been talking about, the economy slowing down a bit. We want to make sure that we're holding very strong levels of capital in this bank in case our customers need us to support them more over the next 12 to 24 months.
Ross McEwan, thank you.
Thank you very much. Thanks, Alicia.